Let's talk about how Forex trading works. It's a little bit different than the stock market, futures market, or the cryptocurrency market. It's pretty much trading currency pairs, and it's going to depict the economy value of how an economy is pretty much doing. It tracks fiat currencies like the euro, USD, yen, etc. Let's go and let's jump into the introduction of what Forex trading is and how we can go ahead and trade it. So it's when you trade currency pairs like Euro USD, for example, on the foreign exchange market. So that's what Forex stands for in the first place. Forex, okay, stands for foreign exchange market. So it's the largest financial market due to the fact that most countries can trade it. If you're in the US, you can't really trade it with what's called leverage. So that's why a lot of US traders trade crypto in the stock market. That's because they ban certain Forex brokers. You can't really trade it with leverage, but if you're in Europe, Asia, and other countries like that, it's extremely popular, and a lot of people trade it over there. It operates 24/5, so that means Monday through Friday. It's pretty much going 24/5, so except for the weekends, always going, always running, and that means price action is always moving. And it goes off of time zones too. So depending if you're playing a European session, for example, okay, then something like a European currency pair would definitely make more sense to pay. Or if you are in America playing on like Oanda or Forex.com without leverage, then you could play a USD pair, something that will correlate within the New York time session, which is 9:30 a.m. Eastern to 4 p.m. Eastern. Yeah. It's also decentralized, so it's a lot of peer-to-peer transactions going on. And Forex is really, really old. It's been around since like before the 70s, and people would trade it without the computers, with pagers and stuff like that, buying certain currency lows and taking advantage of certain market crashes. So buying Euro USD means that you're purchasing euros and you're selling US dollars. So you're betting on the euro appreciation. So whatever the first term is in the pair, say for instance, if you are playing Euro USD, or if you're playing JPY USD, okay, whatever the first pair is, you're going to be betting on that to appreciate. Okay, so that's how you're thinking of it from an investment standpoint. That's how it works logically, instead of just playing it from the chart as a day trader or something like that. And as far as the banks, they facilitate most of the trades via the interbank market. And retail traders are also allowed to trade too. Like I said, a lot of American traders can't really trade Forex regulated, which means that it's backed by FDIC, which means that, let's say you have like $1 million in your account and the broker shuts down. There's laws and regulations saying that like you'd get your money back, but a lot of unregulated brokers don't have any FDIC. So I really would avoid any unregulated brokers just to keep your bread safe and avoid getting scammed like certain other traders have gotten. And central banks, they influence rates through the monetary policy as well too. So big banks, big hedge funds, and just large whales. So any large body of people or single entities are just buying large amounts of currency as well too, betting on the economy's future. So let's understand the currency pairs. So the pairs consist of a base currency, okay, which is going to go ahead and be the first section of the pair, and a quote currency, which is going to be the second one. And the exchange rate shows how much of the quote currency buys one unit of the base. We're also going to have major, minor, and exotic pairs. They differ in liquidity and spread. Okay, liquidity is pretty much just going to mean the amount of people that's trading. Okay, the amount of money that's fluctuating throughout the market. Okay, you want to be trading things with high liquidity for the most part. Okay, things with high volume and liquidity are going to move quicker. Okay, and a lot of the times people are going to be looking at the same levels that you're going to be looking at too. And a lot of times, once again, that volume is going to come in, and a lot of times the plays are going to happen much cleaner and faster than something without a lot of volume. It's also going to help you save money too when it comes to your spread. And unlike futures, Forex definitely has spread. And what spread is that by the time that you close, you wouldn't get all your full profit because some of the money has to go back to the broker that's hosting whatever you're trading on. So you want to be trading things with the least spread as possible so that you're getting all your bread and you're not losing more bread than you would have when you take a loss as well too. So for example, if 1 GBP slash USD is 1.30, then it's going to cost 1.30 US dollars to buy 1 GBP. So when you're opening a trade, okay, you can buy two directions in Forex. You can buy long, and that's if you're betting if price is going to go in an upwards direction. Okay, so let's say for instance, you were playing for a resistance breakout. okay, or waiting for an area of resistance to be broken, turn it to support. Okay, a couple options you have to play, whether you're trading long on Forex, or you can also trade short, which is when you're going to bet that the direction of price is going to go in a downwards direction. Okay, so you can wait for an area of support to be broken, turn it to resistance, or short at an area of resistance that's going to go ahead and match your previous area of resistance. So you can play a resistance mirror or wait for support to be broken, turn it to resistance, up to you. And you can use leverage to control larger positions with less capital. So once again, that's going to be for my non-American traders. I know I have a lot of non-American students that sign up, but for my American traders, a lot of the time you guys are better off just playing futures, because you can't trade with leverage in United States. We have the crypto markets and stock markets, so recommend you go trade that instead. And if you want to learn how to trade that, head over to Stackmode.net. So for example, if a trader buys 10,000 Euro USD at a 1.110 with a 1 to 100 leverage using $110 as margin. Okay. So what margin is going to be the bare minimum amount of dollars that you need in order to open the trade. So what the broker is going to do is pretty much represent you. But keep in mind that if your account goes underneath the margin account or the margin level, you can definitely owe the broker money. They'll send you some lawyer papers and they'll definitely sue you instantly. Okay, so make sure that you're on top of your game. You make sure you're not trading with too much size, and make sure you're trading with the stop loss too. It's an automatic order that's going to make sure that you don't get clipped out. Okay, they will sue you instantly. You'll instantly get lawyer papers if you don't pay within like 3 days. So that's what getting liquidated is. Okay, so make sure that you have enough money when you're trading things like Forex with leverage or even futures, for example. Okay, pay attention to the amount of margin it's required in order to keep your trade open. It's going to differ per broker too, so there's not a static answer. Let's talk about managing your trade. So you can monitor price movements using technical or fundamental analysis. So put them both together. You can see what a country's economy is going through, or see if a country's economy has been uprising in a positive manner. Like for example, I believe El Salvador, for example, has been buying lots of Bitcoin, bringing lots of attention to it, since they've been making money through their investments, bringing more value to the country. And they've been implementing education in schools and stuff like that. So depending on certain countries, right, or if USD, for example, we're trying to remove capital gains tax as of 2025 for cryptocurrency, lots of job improvements are coming in and stuff like that, banning or making international hiring more expensive. So that brings more pressure for US economy to pretty much improve and for us to hire more US citizens. So that's going to go ahead and improve the Forex's level for certain US economies. Okay, so a lot of the times, whatever is bullish, which means whatever is going in a high direction or an upwards direction for quite some time, this normally means that something's performing well, whether it be a currency, stock, cryptocurrency. If you just see something going in an upwards direction, for the most part, it's performing well. Once again, set your stop loss. 2, make sure you know where you're about to close at. Okay, if you take your loss, take it like a man or woman. It is what it is. Take it like a lesson. Okay, and don't let it happen again. If you let it happen again, that's your fault. And just don't crash out. Okay, relax, keep trying over and over again, and take S plus setups. Okay, once again, if you don't know what S plus setup is, I have so much free education for you guys, absolutely everywhere. Okay, technicals are going to be really the easiest part. Once you get that down, it's just straight emotional control. Okay. And figure out what broker you want to use, and figure out what brokers have the best spreads. Okay, you want to be playing the broker with the less spreads. Okay, less spread is possible, which means the more bread that's going to be in your pocket that you even deposited in the first place. So closing the trade, okay, you can close the trade manually for take profit, for example, but stop loss, I recommend you guys always have an automatic stop loss no matter what. Don't close your stop loss by yourself. 2 reasons. 1, you might get emotional. Okay, especially if price actually starts moving fast. Or 2, sometimes there's going to be news. Okay, and if there's some negative news that comes out and price clips right past your stop loss, you're going to be upset. Okay, once again, bring you back to step 1, you might get emotional. Okay, because you're like, dang, price went way past my stop loss. I wasn't supposed to lose that much bread. And instead of you just closing on the spot, you're going to be hoping that price sweeps up, and then everything that you plan is all off. Okay. So gains and losses are going to be credited to your account instantly, but don't let that get to you. Okay, even when you start making some bread, that doesn't mean take 1,000,000 trades a day to try to keep running that bread. Stop it. Okay, take 1 trade a day, journal it. Okay, be grateful. Okay, and understand that every trade that you take is going to be a lesson, whether it be a win. Okay, be like, okay, how can I keep getting this consistency? How can I keep getting this positive equity curve on my account? Let me take this type of setup over and over again. And the only thing that should change is the amount of contracts or pips that you're playing with. And pips in Forex is going to mean size. So the amount of pips that you have is going to equal the amount of money that you're playing with, essentially. Yeah. So don't get greedy, and also don't crash out either, too. Just because you can click buy and sell instantly, take your time, okay? It's the reason why God tells us to be patient. Make sure you guys just are thinking before you do anything, okay? Think extremely hard, okay? Because you don't want to put yourself in an emotional state and be mad at yourself because you're like, dang, why'd I do that dumb stuff? And I should have thought about it before, okay? Don't self-sabotage. So benefits, okay? The benefits to Forex is that it's 24/5. Okay, so depending on especially your work schedule and stuff like that, if you are determined to be a day trader, okay, even though you could swing trade and stuff like that, but if you want to day trade and say prop firm, for example, and stuff like that, it's going to be 24/5, and there's a lot less margin requirements compared to futures, so it is a lot easier to go ahead and swing trade Forex as well too. So you can choose what market works for you and then go ahead and play that. And there's a lot of leverage too for small capital as well too. So margin is not as intense as futures. Okay, so you're going to be able to hold the trade for a long time, especially with the small amount of capital. Okay, there's a lot of instances of people turning small amounts of money into large amounts by just holding their trade, especially on Forex. No time decay either, just like options. So that high leverage can either be a lot of power or bring your account to a lot of destruction. So take your time, be graceful with it. Don't trade with any ego, be humble. Even when you start making bands, okay, understand that you got to be bigger than the program. Okay, don't trade off of P&L, don't trade for numbers, trade for pure discipline. Okay, when you open those charts, you can't be thinking about instant money. You can't thinking instantly. Okay, thinking about how you're going to be waiting for the setup to come, how you want the setup to play out, where you're going to close. Okay, set your take profit. It's going to be where you close and take your bread. Okay, think. Understand what pairs you want to play. Understand what pair works for your time zone too. Okay, there's going to be pretty much pairs for a lot of countries that trading is allowed in. So figure out what works for you. Okay, what works for every trader is not going to work for you. Okay, there might be something that you do that's going to be different. If you see someone profitable on Euro USD, that's them. You might be slam on USD JPY. Okay, so figure out what you like, do your testing, and ride your wave. Okay, step right up to God, keep grinding. Head over to Stackmode Network for all trading education. Catch you in the next one.